Hey guys, this is Rudy coming at you live from Palm Beach in Florida. Good morning. It is Sunday. It is April the 21st. We're almost heading towards the end of April here. I figured what I'd do is put the most recent book I was reading behind me so that you don't have to ask me what I'm reading. Anyway, this is an interesting story about the Giancana mob family and the corrupt clan known as the Kennedys from way back when Uncle Joe Kennedy was bootlegging, anyway, that's kind of a cool story if you have time and you want to read something interesting. What I want to talk about today is semiconductors. And one of the reasons why I want to talk about it is because of that thing we know as FOMO, F-O-M-O, the fear of missing out, right? So am I in semiconductors? No. Should I be? Well, that's what we're going to find out right now because they seem to be everywhere and including, I guess, in your portfolio, right? So what happens is when you see a massive run on a stock like NVIDIA, then you have that FOMO kicking in, saying the fear of missing out, should I buy this? Why is it not in my portfolio? Now, as it is, my portfolio is bulletproof and it's loaded with such exceptionally good issuers who issue their stock publicly that I have no particular reason to have a fear of missing out on anything. But at the same time, I don't want to be ignorant. And just because I don't know anything about anything, including semiconductors, doesn't mean I shouldn't pay attention and maybe take a closer look at it. But as usual, you guys are the experts. And I'm pretty much just, 1 inch deep and 5 miles wide, being Mr. Oxy, focusing on oil and gas and all that kind of stuff. So you can let me know, you techno geeks, what do you think of the semiconductors? Are you in it or not? If you don't know what a semiconductor is, it's pretty much in everything that you touch and use every single day, including your computer and your phone and stuff like that. But take a look at this just for sake of reference. The average modern car could have as many as 1,000 semiconductor chips. Even older cars have about 300. And some of the latest, greatest EV cars have about up to 3,000, so semiconductors make everything function, anything that you could possibly think of. As you stare on this, as you stare at this slide that I've put up here, you can kind of get an idea of how big it is. So what prompts this? So let's quickly take a look here at some of the guys on the platform previously known as Twitter, which is now X, Double Chin Capital. You can follow Double Chin if you'd like. His handle is Off the Run Trades. A few days ago on April 7th, Double Chin made this post and he said, the chase is slowing in semis while it accelerates in energies and materials. That was kind of his proposition in terms of where he's coming from. And his references here is SMH. I'm going to talk about SMH quite a bit in just a second. And then, of course, he references XLE, which I talk about all the time, and XLB as it relates to materials, right? So this is Double Chin saying the chase is slowing in semis while it accelerates in energies and materials. Another guy I follow on X, Kip, and this is a guy I trust and I actually interact with on quite a regular basis. In fact, I'd say we probably agree with one another at least 90% of the time. But yeah, Kip is someone that I would definitely want to pay attention to, so you could follow him as well. His handle is up here. It's at K Heritage. So April 20th, just yesterday, Kip tweeted, and he said the semis, SMH, just hit their most oversold level since the bear market lows of October 2022, a level we call extreme oversold on steroids. I like this one, extreme oversold on steroids. And in parentheses, he adds EOSOS. Well, if you really want to just say it out loud, you could say that just, that was quite a drop. Anyway, that's not necessarily what he meant, but that's just what it sounded like to me. The key was the action in the general, NVIDIA. They finally come for the generals, down 10% on the day. He's talking about Friday when NVIDIA suddenly took a nosedive. We went aggressively long the semis in 2022 in October, took some profits along the way, and now we will be going aggressively long again. So this sort of concept of, firstly, FOMO, fear of missing out, and secondly, buying the dip, maybe kicks in here. How low can a dip? Well, we don't know, right? Because we can't predict. So what is this thing called SMH? It's actually an ETF, which is an exchange traded fund, and it's managed by Van Eck. The current price, so NAV, is how much it will cost you to buy one share. It's $199 as of April the 19th. It has an expense ratio of 0.35, so you need to be aware of that. It costs you a little bit of money to have other people manage your money for you. It's not too bad. I mean, some of the ETFs have a lower expense ratio than that, like XLE, which is only 0.1, and others are much higher. The year-to-date returns, not too bad, 13.9, and it's pretty good. Sort of almost in line with some of the energy stocks. And total net assets, 16.3 billion. So this is not a small fund. It's been around for quite a while, since 2011, so it's about 13, 14 years old. The fund description, this is from their website, so you can look at this if you'd like. Tells you what they invest in. And basically, it's telling you here the MVIS US listed semiconductor 25 index, okay, with all these letters behind it, which you can look up if you want to. Otherwise, you can just look at this video and I'll tell you what they invest in. The fund highlights highly liquid companies, industry leaders, and global scope. Right, so far so good. Let's take another closer look here. Companies initially eligible for inclusion in the index, principally engaged in semiconductors, deriving at least 50% of the revenues from it, market cap exceeding 150 million, so they don't want to be in any small caps or micro cap stocks. 3-month average daily trading volume of at least $1 million US, and at least 250,000 shares traded per month. It's not that much, but this is sort of the criteria for eligibility. You can buy SMH on the NASDAQ. And if we look right at the bottom of the screen here, the Morningstar ratings, overall is 5-star rating out of 232 funds, overall 3-year, 5-year, etc. Rated pretty high. It's been a good performing fund in general. Looking at a picture over the last 5 years or so, if you had invested $10,000 in the VanEck SMH semiconductor ETF, you would have approximately $35,497 today as of April the 19th. And this is important for a variety of different reasons, including math. Of course, it's one of the most important reasons is it shows you that it's had a significant gain. From a mathematical point of view, I am looking to always achieve at least 15% compounded annual growth per year, because if I can grow compounded at 15% per year, I can double my investment every 5 years. If I had achieved $15% over 5 years with $10,000, I would have $20,000 today. But if I had invested only in SMH and nothing else, I would have had $35,000. So it has outperformed my goal or my target performance quite handsomely and easily. What is in SMH? So as I said at the start, it is an exchange traded fund, which means it's a fund that consists of multiple issuers' stock within the fund. The top 5 year actually also represents 50% of their holdings approximately, right? So we have the top 5, which is NVIDIA. You can see the percentage of assets just here to the right, 21. Taiwan Semiconductor Manufacturing, 12. So there are 32 there. Broadcom, another 8. That's almost 40. And then you got 5 and 5 year ASML Holding, which is in the Netherlands, and Qualcomm. In the past, over time, I've held some of these stocks before. I'm not very heavily invested in technology and have never really been very heavily invested in technology. I have invested in fintech, which is financial technology, but that's a separate discussion. It's not related to this at all. But if you look at the top 5 here, these 5 companies, NVIDIA, Taiwan Semiconductor, Broadcom, ASML Holding, and Qualcomm represent almost 50% of their holdings. Now, of course, when you have a company like NVIDIA, whose stock just takes off and flies, then the entire ETF will be performing better. So let's take a look at the actual SMH ETF. Quick snapshot here. You can buy it, as I said at the start, for about $200. The ETF, unlike NVIDIA, only dropped about 4.5% on Friday. I took the screenshot at the close of day on Friday. And then the expense ratio we talked about, the total assets is quite large. It actually even pays a, excuse me, small dividend of $1.04, which is currently yielding 0.5%. So you're not buying this for the dividend, you're buying it for the stock appreciation of the various issuers that make up the ETF. It's sitting just right, or let's say it's sitting just between the sort of midpoint and the 52-week high on this little grid here at the bottom that shows you the 52-week range, right? So it has hit 240 and it's now sitting at like 200. And the midpoint here, obviously sort of just over there, so it's sitting just right of center, or otherwise quite a drop off from where it was at $239. At the bottom here on the right-hand side, I've added the morning style box, the morning star style box, and you can see this is high risk, high return, right? So when something is high risk, you expect high return. Of course, if it's high risk, you also expect significant volatility in the price from time to time. Been a good performer, as I showed you on the previous chart, so no worries there. If we look at the top 5 individually, and I'm just going to wrap this up here with a quick snapshot of them. NVIDIA, can you believe this, trading at $762 even after an $84 drop, right? So it dropped 10% on Friday down to $762. Do you buy NVIDIA or do you buy the ETF SMH? If you buy the ETF, you get a bit of risk mitigation because you're not exposed to the single stock risk. But where's NVIDIA going? You know, maybe in 10 years from now, you'll look back at NVIDIA, assuming it still exists in its current shape and form. It might be trading at $7,000 or $7,500, which is a 10x, but who knows, right? We never know, especially with technology because things change so quickly. Massive company. Prior to the drop, it was valued at over 2 trillion. And on Friday, it closed at 1.9. PE ratio, you know, it's less significant here to look at the PE ratio to decide if the stock is priced well or not. I think the forward PE on NVIDIA now is around 25, so it's kind of reasonable. We looked at the 52-week range. At the bottom, you can see it's a big ownership held by institutions, the usual guys, almost 66%. No one's really shorting it. It's been a top performer, as you can see on the graph. But do you buy NVIDIA here after the 10% pullback, or do you buy SMH? You guys let me know. How about number 2, Taiwan Semiconductor? So this is number 2 in the top 5. It only went down 3.5% on Friday. And ironically, Taiwan Semiconductor is actually the cause or the reason for the sort of semiconductor pullback, because they announced results and made their guidance look a little bit less attractive than before. Anyway, you can buy this one for $127. It's based in Taiwan. It's interesting, the comment here at the top, based in Taiwan, province of China. I'm pretty confident Taiwan is still regarded by most people, or many people, as a country, but province of China, I don't know. It's too political for me. Sitting just right of center on its 52-week range, $80 to $160, currently trading at 127. $662 billion market cap. The PE ratio a little bit more reasonable, 25. Graph obviously looks good. No one's shorting this. I don't think anybody would really be shorting semiconductors. How about Broadcom? Interesting ticker, AVGO. Large cap growth stock. You can buy it for $1,204 per share. It's a $558 billion company. So also sitting just sort of in between that midpoint and the high point of the 52-week range. Heavy institutional investment at 77%. Good looking graph, right? So all these companies are mega billion-dollar companies, and their performance has all been good, as we've seen the run, as Kip Perriage mentioned in his X post, you know, when they went long aggressively in October of 2022. The semiconductors were just flying. It was a good time to get in. And maybe I should have listened to Kip at that point in time if I was worried about the FOMO, the fear of missing out. ASML, based in the Netherlands, large cap growth stock, $859 per share, $339 billion market cap, PE ratio of 44, pays a dividend of $6.60. It's currently yielding just below 1%. This one's sitting almost like smack bang in the middle of its 52-week range. I mean, obviously the chart looks good despite the drop most recently. Qualcomm, this is actually a stock I had in my portfolio once upon a time, many years ago. I think it was probably about 10 years ago. I owned Qualcomm when it was trading at around $50, $60 or so. I wasn't sad to let it go. I didn't particularly like the stock, and generally I don't really want to invest in things I don't fully understand. But at that point in time, it was just part of my diversification. Large cap as well. You can buy this one for $157, $175 billion market cap. PE ratio is quite reasonable, only 22. Same as all the others, right? Institutional holding 75%. decent looking graph, except it hasn't outperformed like the others have. It sort of underperformed the three major indices for a long time. So the Dow and the S&P 500 and the NASDAQ over the past few months or so. And then it spiked only most recently, sort of into March, before pulling back now again. So Qualcomm looks probably less attractive than the others. So that's a quick wrap on semiconductors and specifically SMH. Are you in the semis, or are you currently looking at potentially getting in? And if you are, what are you going to do? You're going to buy an ETF, or are you going to pick a little basket of semiconductor stocks, like maybe from the top 5 that I just showed you? I don't have a position in any of these, so as a result, I also don't really have an opinion on that. And as I said right at the start, I'm not suffering from FOMO, because I have a bulletproof investment portfolio that's probably about 75% energy, oil and gas, coal, uranium, etc. So my portfolio looks okay. But I'm always willing to look at the other 25% and maybe move some of those diversified holdings that I have into something else, like materials. The most recent video that I made was about a materials company out of Ireland, and you can look at that one if you're interested. I'll post a link to the video up here in the corner. And then, I have some financial stocks and other things like that. I can always move some stuff around and maybe buy some semis. And maybe this time I should listen to Kip and buy SMH aggressively, go long after Monday's dip, which might be tomorrow. We'll see how that works out. Anyway, let me know what you think in the comments. Take care. Thanks for watching. Bye-bye.